The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're doing well this morning. Not a lot going on here except for some votes, of course, that you guys have probably been watching the details of that on every news channel. God, it's just crazy how every channel now seems to talk about political things. I mean, I'm talking 99% of the rhetoric on CNN and Fox, and nobody watches sports anymore. They just watch the political games. Unbelievable. Let's take a look at the S&Ps. And while we're talking about the S&Ps, somebody in the den had asked about looking at ESM7 relative to the continuous. So the reason we switched to the continuous is because on some products, treasuries, index futures, I think we switched on a couple of the dollar and some currency futures. We switched to continuous contracts because, let's see. We switched to continuous contracts because, these contracts, okay, so volume relative to price obviously is the name of the game in a lot of the things that we do. And I'm sorry I switched positions lately because my back is killing me, so we got a new desk set up here. For instance, new crop beans, old crop beans, probably John from Philadelphia will tell you a lot of times they just don't have any continuity when it comes to trying to mesh those contracts together and form a continuous contract. And if you look at the continuous contract for some of those products, the cocos of the world, and let's just take for instance soy meal, stuff like that. A lot of times they don't. I don't understand how they can even make a continuous contract out of that, but they do. So when we're doing volume relative to price analysis, we decided that it would be a lot better to use these contracts that really do have a lot of continuity over time, because we need a little history to build some of these profiles moving forward. So we switched pretty much to continuous on some contracts. And on the ultra short term, you're not going to really see a lot of difference in profiles, inflection points, what have you, because they're pretty much wrapping themselves around the most recent history for the most recent contract, in this case being June. So, but on the longer term, what I feel it does is it gives us a little more edge, because we pretty much have the volume we need on a continuous basis to really build profiles, and especially the current profile, especially when you're kind of rolling into these new contracts. So I'm just going to avoid on some of the treasuries, the indices, the dollar, things like that. I'm just going to avoid the front month from now on and just use the continuous. And that's what's actually now outputted in the scanner. So that being said, looking at the S&Ps, we talked about this fair auction here in 2341 ultimately being visited based on that new profile attempting to appear. That's happened. I don't know if you need to be rolling the dice right now. There's a pretty good mixed bag when it comes to looking at our breadth calculations on the S&Ps. I mean, if you look at that, and especially this weekly, I mean, if you factor in what's going on here with the weekly, I mean, you could actually Monday morning, as long all things considered, if everything stays the same, actually have negative breadth on the weekly and the daily long term, which would be pretty non-committal to get into a long situation. around this 23.41 area right now. So I don't see a lot of edge in trying to buy that. I think this is a wait and see. Let's wait for a weekly close. And that's the way I'm looking at this. Crude, continuing to stay, and a weekly close is pretty important here. Continuing to stay below 48.76. I hate to say this, but sometimes you just got to wait and see. There's a lot of wait and sees on the board right now. And today may be a nice day to just go do something else. Gold. Again, I love this horse. I just want to ride it north. I mean, this is, 240s. Now you got support around 1244 on this one with a little noise, short-term ultra. There's no reasons that I see to take this off on the intermediate or the long-term weekly. You guys aren't hearing me? Huh. Didn't sound okay. Okay. All right. Okay, good. Sorry. Somebody was saying they couldn't hear me in the den. So I don't see any reasons to really get nervous about getting out of gold right now on the long side. I just think that, the risk is to actually be short this product. So you're kind of blocking out that side like we talked about. So let's, again, just reviewing some usual suspects. I love how this dollar is acting. I like this concept that it's good possibility it may close below these 99.63 areas. And that's pretty cool. The yen, we're going to take a look at the yen at the same time. Let's pull this up. All right, here's our currency server. All right, so got the euro up right now, but let's take a look at the yen. Talked about this one kind of more of an overreaction relative to the dollar breaking down below 111.67.68, a weekly close there. That's just ultra damning for the longs here. And we talked yesterday about trying to trade any rallies back up into that 111.67 area. That actually happened yesterday. There's the 111.59. So we were piercing below. We kind of, went back up and retouched it already, almost today too. But we were about, let's see. Let me just restate that number here on the weekly. Yeah, we were about 8 ticks off of that retracement back up into that big, powerful number, 111.67. Again, we reached a high yesterday at 111.59. So kind of pierce below, go back and retest. And again, I know the weekly close needs to be that stake put in the ground here, but it's been a nice little situation to play around with that. I don't mind continuing to look at the short side on this one. We talked about not trading this bounce down here at 111.67, trading the breakthrough, the retracements. I still think this particular currency could come unglued a little more, as well as the dollar. So keep that in mind when you're trading commodities right now. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Man, I really agree with that golf outing in Southern Pines or Myrtle Beach. Southern Pines would be awesome. Man, there's some great courses around Pinehurst. Just beautiful part of this state. So you guys email Tom till he submits. Just keep emailing. I'll give out his cell phone in just a little bit. Here's a British pound, 125.39. Top of the box weekly, bottom of the box at 121.45. So I think John from Philadelphia was probably correct about trading that on the long side of. I mean, that was 400 pips, man. Woo. All right, so right now, if you did that, you got to be looking at some resistance here. Yeah, beautiful, kind of secret part of the state, actually. That Pinehurst area. It's got this Uwharrie National Forest kind of a little west of it. Just a great part of the state. Not a lot of people around. That's why I like it. Beautiful rolling hills. And if you like pine trees, big time. All right, so let's go back to the futures for a second, just to kind of cover some bases here. Almost moved there. Well, it was more of a golf head. Let's take a look at the treasuries really quick. You know, I just think this is a total crapshoot right now. So I'm again, the 10-year and the 30-year, just no edge. When there's no edge, don't push it. That's kind of a lot of traders will tell you that. XLF, let's just hit this really quick. Obviously, kind of taking it on the chin lately. Broke down technically on the weekly. I wasn't expecting that type of breakdown, but the daily, we kind of went back up and retraced into this 2380 and backed off. Pre-market, looks like we're about where we closed. Looks like we got a couple of prints going off there. 2359. So that's the story there. The utilities kind of backed off a little bit, but you know, I'm looking at this as kind of a buy support area. I know this thing's made a great run and has really, you know, Tom and I were talking about this as well as some other people on TFNN, I believe. It's just amazing the relative strength in this index at the same time rates have been going up. And this is usually not the case for this. So you got to look at this and say, wow, is it going to snap back and kind of come back to reality, or is this just showing itself? I'm kind of looking at it as a show itself type scenario with the XLU right now, and looking to buy support here. That whole area, Southern Pines, Whispering Pines, Pinehurst, Aberdeen, really cool part of the state. There's actually Whitewater Rapids a little west of there, which is really weird. It's a mountain range called the Uwharrie Mountains. Not too high, only 2,500 feet. Apple, again, this is just nothing to play around with on the short side. I just wanted to point that out. I don't like Apple, but you cannot short it right now. Let's take a look at Microsoft. This has been something that really has been a buy the dip, buy support situation. Here's what happened, the day before, and then there's the top of the range on the daily. So it's a great place to look at these inflection points to kind of pick your battles. 64.11 on the daily, bottom of the profile, and then 64.10, top of the profile on the weekly. So again, you're kind of like coming down a stock that's strong, coming down into the bottom of the profile on the daily, while at the same time staying in that upper range on the weekly, just still showing itself as very strong, not wavering at all. Let's take a look at Twitter. They're talking about actually trying to make money and charge people now, which everybody's so cheap these days that I don't even know if that'll work. 1506. So we're sitting right at the precipice here, the weekly unfair lows, and that's incorporating some pre-market activity. So, trying to put out some good news still doesn't work. Just giving you a chance to short it again, in my opinion. 1506. Again, give yourself a little room there, but I still think this stock is shortable. Just hemorrhaging cash. Huge. Let's take a look at Tesla. For you guys who are living on the edge, here we go. So let's get the right time frame up. Remember, on wide profiles, we talked about this yesterday, you got to be kind of willing to play the POCs, the blue lines, the mode of the profile, if you will, the most well-traveled area of the fair auction as we see it. 249.18. I think we reached the low of on, excuse me, let me just look here. Yeah, yesterday we talked about this, came down and kind of got into that area. Remember, that weekly kind of trumps this when you got some major inflection points to take advantage of. Let's take a look at UTX. This is kind of a cool setup, in my opinion. Coming back down into some support here, top of the profile on the weekly. So that is 111.66. Right there at a battle point. See if I can get this thing up here. So as we look at a couple of custom sorts, I just want to go in the matrix and hit them really quick. Excuse me. Let's just take a look at some shorts here. Let's just block out the longs. Let's just look at some custom sorts. Let's just look at some breakdowns here. Wow. So quite a few stocks long-term starting to hit breakdown mode. Let's take a look at FedEx. So this is, again, the daily on FedEx here. Let's take a look at the weekly. So decent, not great risk reward, but decent. And kind of that daily breakdown. Now you can kind of come up and maybe sell 191.82, but I want to bring this up on my e-signal charts really quick. Excuse me. Ate at Rouse last night. Didn't want to, but did it. Here we go. Let's take a look at FDX. All right, so that kind of break below that 192 area, that's on a wide profile. Remember, that POC means something, so we kind of broke down. Come on. So, I'm kind of looking at this stock as a short opportunity, but we've got to retrace back up into 191.82 now. And man, we're trading 189.60 pre-market. So, okay, we're still down there. Let's take a look at a couple other stocks here. General Motors. GM. All right, so we kind of started having that weekly migration we talked about. Let's cover this when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you could potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, finishing up with General Motors. Man, a lot of these, there's quite a few breakdowns here. But one that seems to be the eternal sell resistance, sell the breakdown is this sector, of course, that Macy's resides in. Was this a real print? Yeah, trading about 28 this morning, so even lower. So, we talked about, and again, this is getting ready to just be in the abyss down here. Wow. So, we talked about staying away from these brick and mortar related companies. I mean, there's just, there's just the business model has just got to massively, drastically change. I almost wonder if they'll do these self-serve type things and just get rid of all employees. Just walk in like Costco. But anyway, Macy's just looking, just taking a bludgeoning. See if I can get my screen to change here. Let's take a look at a couple other stocks in this sector. I mean, it's hard to just get massively happy on the long side in this market right now with a mixed bag going on, and then some breadth changes that are happening in the overall. I mean, we talked about looking for if you're trying to short the market. I mean, obviously that S&P trade was pretty good the other day, but a lot of times you don't know if those things are going to break. But why not be in instruments that are just pieces of crap? So when the market comes off, it just falls over dead. So a lot of these, a lot of these Targets and Macy's of the world, just ugly situations. Let's take a look at Kohl's. Just again, looking for a reason, any reason to come off. So here's a couple other ones. We've been talking about these. Sell resistance, sell breakdowns. Again, these things on their lows can go lower. We say that probably too much, but things on their highs can go higher too. But taking a look at Under Armour, this has been one, after that massive pullback that one day, again, just kind of trying to base trades around inflection points here. Sad. Let's take a look at Amazon really quick. All right. So let me get the weekly up. That's the daily. Yeah, not one to come off really off the long term. So again, launching paddish here. Don't try to be a hero and start shorting Amazon right now. We're trading 851. Looks like pre-market. So back above weekly profiles. Just again, things on our highs can go higher. Home Depot, kind of watch this as my pet long. Really I don't think this trade's over on the long side. It's just amazing. You had a couple of reasons to back off some of it, but this thing's a horse, and no reason to play around with that on the short side either. Big Mo. So came off yesterday finally, but again, coming back into the truck up area, 74.22. I still think this is a great trade getting back above there. 3M. Still like this on the long side. I know this train's kind of left, but might have some more in it, so don't see any real serious reasons to take anything off on the ultra long-term trade on 3M. These are some stocks I've been watching. Okay, Johnson & Johnson. We talked about taking some profits on this, but we're kind of getting down into an area. The weekly still looks great. Getting down into the truck up area a little bit lower. We talked about, the intermediate gave us that sign, take some weight off. So 125.15, just kind of licking my lips when that is approached. And it looks like we're trading 125.66 this morning. So getting close. Really good opportunity to base along with some stops below 125.15 on Johnson & Johnson to maybe add to that long-term position on Johnson & Johnson. Let's take a look at the NASDAQ really quick. All right, so yeah, the NASDAQ is kind of off limits right now. That's a sign that if you've been in the ultra long-term investment mode of the NASDAQ, you got to sit tight. Let's take a look at Dow Chemical really quick. Similar situation here, even though it's kind of like had a nice snapback yesterday. This is, again, something you've got to kind of, it is what it is, and we're probably going to have new supply on Dow Chemical. I wanted to look at a couple other stocks here that, let's go back to our dashboard really quick, and look at some stocks trying to put in some new weekly profiles. So if you can see this, there's quite a few. And if we look at the S&Ps as a whole, you're still climbing here. You got 55 stocks trying to put in new supply areas up top. We're probably going to convert some of that over Monday morning. We could have negative breath on the long-term weekly. That's a pretty rare occurrence when things cross over. So last time, literally, we crossed over to longs was that Trump, election results, that November 11th, 8th, whatever it was, 8th, no. Yeah, something like that, the 8th. So crossing over on the long-term weekly is a pretty big deal. That means you're not supposed to be buying 2341 on the S&Ps right now. And if you look at a lot of these stocks, let's just pull up a couple. Let's look at Clorox here. A lot of these are, we've had a good run, and might be time to kind of do some backing and fill in at bare minimum. Take a look at General Dynamics. Everybody's favorite warmonger. Here we go. General Dynamics, again, similar situation. You had a good run, hadn't had any indications since that November election situation, and now we're probably going to have some new stakes in the ground. Oh, ouch. On GD. Here we go. Let's take a look at a couple other stocks in that same camp. DH Horton, DHI, let's take a look at that one. Okay, it's showing up in the scanner, a new profile attempting to appear. The scanner's right. We just don't have this showing on the chart right now. So DH Horton, another stock to back off from on the long side. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. So was taking a look at some breakdowns here again. Pitney Bowes, poor Pitney Bowes. Here's the weekly. God, man, ugly. Again, offered some kind of resistance areas to sell recently, a couple of weeks ago. Breakdown below 1283. Now you got to trade retracements back up into 1283. Poor Pitney Bowes. Here we go. A couple other stocks here. There's the coal situation. God, man. FSLR. Man, that's painful. Let's take a look at FSLR on our e-signal charts here. Breakout, key reversal. Not good. Explore the fair auction breakdown. God, man, this is brutal. Whew. Yeah, these things are not on sale. We get any type of market pullbacks. I mean, they could crush these things again. Let's take a look at a couple other ones here. Rider system. Kind of already retested that. Might be in for a little bit more of a ride down below 74.02 on this one. Kind of already retested, rejected it. Might not be a bad trade on the short side on this one too. There's UPS. We'd looked at FedEx before, both of these on the breakdown scene. There's a bank that's breaking down below technicals there. KSU, Kansas State. Just kidding. Let's take a look at a couple other things we need to look at. Let me get this out of the way. All right, I want to, again, take a look at China here. I mean, I'm just a huge fan of trying to buy support on this and have it reach its lofty goal of 35.21. That hasn't happened yet, but I think you still got to block out the short side on the China A shares market there. Take a look at the Nikkei. This one didn't do exactly, I mean, obviously the yen has a big role in this, but I really thought, and again, this, kind of waiting for the breakout here above 19,680 didn't happen. Now just back in no edge territory, so at least we're not long here on the yen. A couple of banks here we need to be aware of. Wells Fargo finally started coming off here, getting back, and this is a real weird setup. Let me take a look at it in the scanner. Go into the ETF section and hit it. There's the financials. There's WFC. So we're probably going to, I mean, this is a kind of a weird situation. We're probably going to have an inside box happening on WFC. We don't know that yet where it's going to lie, but we're looking pretty good to have a new profile here Monday morning already. So we'll have some new inflection points to pay attention to, ways to trade this. Still not so sure that the financial sector is going to come off in a major way, but this is a pretty big event coming back down into the balanced area on Wells Fargo in the long term. AT&T, again, on that list of new profiles attempting to appear. So there's a lot of kind of heaviness that's starting to kind of put stakes in the ground on a lot of stocks right now. You saw that almost 11% of the S&P 500 is putting in new long-term profiles right now. Let's go back to the S&Ps really quick for those who missed the show opening. 2341, big number there. I don't think you should be buying this kind of pull back into the bottom of the profile on the weekly right now. There's a lot of internals that are kind of shifting around. So we could have, you know, kind of a new paradigm that's setting up on ranges for the S&Ps right now. Gold, just to kind of re-summarize that, see all the reasons in the world to kind of stay long this if you can. Make sure you put your stops in. Right now, stops below long-term below 1236. Dollar, I love how this thing's acting. I think we, you know, could get a weekly close back below 99.63. Then that would be obviously a sell point on any retracements back up. I think the dollar can reach 97.1415. Couple of banks here that, let's take a look at Goldman Sachs. All right, so, and let's just take a look at this because we're sitting at the bottom of a profile here. GS. All right, so pretty violent pullback here on Goldman Sachs. I don't think the banks are over on the upside. We've had a great run, and we've had some pretty violent pullbacks right now. This is what, from the peak, and what was this? 55 to 30, 25-point pullback in Goldman Sachs, trading about 232, it looks like pre-market. So this might be something to look at, trying to catch a bid down here, obviously with some stops in place. JP Morgan. Yeah, I think Goldman Sachs is possibly the better trade there. A couple other stocks on the financial side. Excuse me. Let's take a look at Morgan Stanley. Kind of similar situation to Goldman Sachs. Might be able to catch a bid, get back above 42.80 on this one. Again, I don't think these financials are over. Citigroup. Bank of America. So 22.75, kind of rejected that. Could get a bounce back up into 23.77. Not a bad little 5% trade there. Let's go to the matrix, see if that's in there. Nope. Yeah, Amazon is on this uptrend support long. Not a great risk reward there, but again, you know, not on anybody's short list by any means. Marathon Oil, let's take a look at a couple of stocks in the oil sector. Let's look at the XLE first. We'll be right back. We'll take a look at the XLE and a couple of oil stocks, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. So the XLE not yet reached the, and I got pretty close here, but 68.14, big number. I mean, defending it quite well, actually, all things considered. Taking a look at a couple of stocks we looked at that might be, type in the right symbol. How about that? ExxonMobil. Talked about this one, and is that a real? I don't know if that's a real print. Maybe. I have no idea. ExxonMobil, great place to hide in the XLE in the oil sector. I mean, I think Tom was mentioning this too, just looking relatively strong. That bottom could fall out. There's no telling what the markets will do or any instrument will do. Make sure you put your stops in, but not a bad little situation there on ExxonMobil. Really like how that's setting up. Let's take a look at RIG. This is something we've been monitoring. Again, I like this trade a lot. I mean, things could fall through here, but I love how it's defending that unfair high on the weekly 12-12. Pretty low risk trade and decent risk reward on RIG. And again, a way to kind of hide and maybe trade oil. If you're trying to trade oil from the long side, maybe a way to increase the odds, something like RIG or ExxonMobil. I don't know if you guys would agree with that, but it looks pretty cool to me. Let's take a look at couple other stocks in the oil sector, energy. Yeah, I mean, doesn't look good. kind of a sea of red, to say the least. But there's some, situations in here. The ExxonMobil, the rig. There's Baker Hughes. Let's take a look at what's going on here. We talked about this one last week. Baker Hughes. See, I just defended that spot pretty well. Again, a wide profile. Got to pay attention to the POC. That was your initial target. We don't talk about POCs enough because a lot of times they're just not in play. But when you have a wide profile, you've got to pay attention to them. And that little decent risk reward trade from 56 up into 61, really cool. Let's take a look at this one. BHI. And you can do a lot of research with this scanner at night and just get things on your radar screen, put them in your favorites list, and I guess TFNN will put a new install finally on their network today. So there's that Baker Hughes trade we talked about last week, actually, and there's that target being met, not to the tick. Let's see what happened here. 61.20 on that point of control. 61.02 got pretty close though and backed off. Looks like we're printing this morning. 58.68. So that trade's kind of over right now. Chevron, not exactly the darling here. Let's take a look at it. Yeah, this one, ExxonMobil rig setups like that are a lot higher probability situation than some of these ones I just showed. They don't have the edge anymore. Let's take a look at TSO. This is kind of interesting. Let's just pull it up really quick. TSO. All right, so we kind of had the Baker Hughes kind of bounce like that last week, but I'm not opposed to buying this again. 81.27, got a good place to play defense there on TSO. Okay, just to wrap up, bonds and notes, don't see any reason to be in those right now. S&P's probably not worth trading right now for the long side on any bounces at 23.41. Dollar, I think it's going to go lower. Weekly close is going to put a good stake in the ground there. Stay tuned for Larry, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.